Hey guys, Boris Schlossberg. Welcome to the weekly technicals for the Euro complex for September 11th to September 15th of 2017. So Euro took yet another step higher this week, but as we're looking at the technicals here and closing out on Friday, we are seeing just a tad bit of loss of momentum. This 2050 to 21 level could be setting ourselves up for a possible double top formation. The only reason really that the euro would decline is if we get some sort of a bid in the dollar. And that, of course, could be a function just simply of relief. We're heading into the hurricane weekend. Irma is about to hit Florida. If Irma sort of does less damage than what the market anticipates, the relief in a dollar, I think, could be significant enough for the dollar to bounce back next week. But if we get massive amount of damage, if it really does huge amount of burn and churn through, especially not even the Miami area, but the Orlando area, which is really the epicenter of economy there and could really hurt Disney, then you'll see the euro probably take out fresh multi-year highs. We basically, if we look at the weeklies here, we're basically very much at the 3-year highs over here. But this level on the weeklies, this 121, 120 level, this is, we filled the gap, is a clear resistance point. The next really big resistance point will be the 122 level. Either way you look at it, it's been a monstrous, almost a vertical rally in the euro. It's certainly due for at least a modicum of pause here. I don't see the sort of uninterrupted move towards 125 unless things go super badly on the US side. In some ways, you have an inkling of modestly positive dollar data here. You have the cooperation on the debt ceiling. You have the potential here that the hurricane may not be as bad as everybody thinks, and generally a relatively benign economic environment. Next week, the only real data set from the U.S. is going to be the retail sales. On the European side, there really is nothing. If we look at the calendar here, the European side really carries no data. It was all data this week, and basically the data this week just sort of said that they're going to make a decision on QE probably in October, but really won't trigger it till perhaps next year. So the euro really has risen very, very hard and very high on the assumption that the dollar just continues to get decimated. And I think we may be reaching sort of a end of the road for that move. Having said this, though, if we take out 121, the 122 area really comes into play, and it's only at that point that you could potentially assume there's going to be some sort of an exhaustion move. For now, there's no indication technically there's an exhaustion move, but we do see a slowdown in momentum, and we do see a possible buildup. Let me just go on the dailies here, of a double top right over here. Now let's take a look at the euro complex and just see how the euro complex is trading. First against the COM dollars, with basically the euro looking a lot weaker on the against the Aussie on the COM dollars, definitely weaker against the CAD, which has been just a monster move. A little bit weaker here, just bouncing back up. Stronger, I think, on a relative basis against the Kiwi. Not really. I mean, sort of topping out over here. And most importantly, here's the euro pound trade, which is something that I was very bearish on since last week. So here's the thing: when you're looking at the euro on a complex basis, euro yen also down, to the downside. What you're seeing is really a camouflage of strength, right? You're seeing the euro actually break down all across its component constituent pairs, with the exception of the dollar. It's really been a weak dollar trade that kind of hides the relative weakness of the euro. So in my opinion, I think that if we get any kind of dollar strength, it will be the euro that's probably going to take the brunt of the unwind next week. And to me, the euro on the complex side, against the pound especially, still my favorite short trade for the time being. And secondarily, against the Aussie, we do have Aussie event risk next week. Could be a very interesting trade if you want to trade it on a sideways basis. One last thing, we do have, I didn't look at the Euro Swiss. Euro Swiss is another area where we have a little bit of weakness coming in. We do have the S&B monetary policy meeting. I expect that to be as dovish as possible. They're going to, give lip service to the fact that they think the Swiss franc is will still way over undervalued. And that actually, in my opinion, could be a move for the Swiss franc to go higher on a relief basis as well. So I would not. I don't think I really want to be that short Euro Swiss. Although technically, nothing here looks positive. It's a lower high on the Euro Swiss, just as it is across many other pairs. Overall, though, if you look at the euro on a constituent basis, you see a much weaker structure than you do on the euro against the dollar, and that suggests that maybe it's time to get short with around a 22, 22.50 stop as you go forward.